Hello and welcome. My name is Nancy Buck and my company is Essential Financial Services. Today we're going to discuss some eye-opening information about the women of America and the issues they face regarding long-term care. We're also going to cover some ideas that should help you plan for your future and be prepared to overcome challenges you may face at some point. The presentation that I'm using today comes from Lincoln Financial Group, and while they do provide long-term care and life insurance solutions, it is not their product that we'll be discussing today. They just put together a very nice presentation focused on women that I like to use. We'll review the facts about long-term care, why long-term care planning is so important for women, and the factors that make women more at risk than men, the financial consequences of not being prepared, the many planning options that are available to you, and next steps so that you can take charge of your future. Let's start by looking at the facts about long-term care. I'm sure you've seen a lot of stories about long-term care, but even though it's in the news, the topic of long-term care is perplexing to many Americans. Many times, long-term care is confused with health care. But there's an important distinction between the two. According to a report from the U.S. Senate Special Committee on Aging, long-term care differs from other types of health care. Its goal is not to cure an illness, but to enable a person to function so that they may live independently. Long-term care consists of medical, personal, social, and specialized housing services in support of those who have lost some ability to care for themselves due to a disability or a chronic illness. Long-term care solutions are designed to address the cost of physical care versus medical expenses, which are generally covered by health insurance. Long-term care services help individuals with the 6 activities of daily living, which are eating, dressing, transferring, which is like, for example, moving in and out of bed, bathing, toileting, and maintaining continence. As you can imagine, long-term care involves assistance with some of the most basic yet intimate aspects of daily living. As you consider this for yourself, consider whether you're comfortable with family members attending to your most basic and private care needs. Or would it make more sense to have a professional caregiver take care of those activities while your family supervises to make sure that you're getting the quality care that you deserve? There are some myths about long-term care, and often these are used by people to avoid digging deeper into one's financial plan. Let's face it, it's easier not to talk about it, especially if it makes you or your family uncomfortable to discuss. But it's the elephant in the room, folks, and you truly must address how you will deal with a long-term care event as part of your overall financial plan. So let's review the most common myths that may mislead you. The first one is that it won't happen to me. Well, the reality is that 1 in every 2 individuals turning age 65 today will need the coverage of a long-term care solution during their lifetime. That's 1 in 2, folks. Medicare and Medicaid have me covered is the second myth. And in fact, Medicare only covers a portion of skilled nursing costs and only up to 100 days. And Medicaid is only available to those with limited assets and income. It's actually rather difficult to qualify for Medicaid. The third myth is that people would say, that's what my savings are for. Well, it's a sobering reality that currently the national average cost for a private room in a licensed nursing facility is over $102,000 per year. That's $8,500 a month. I pulled some information about Denver specifically from retirementliving.com, and a semi-private room listed there is around $8,000 a month. A private room is $9,100 a month, which is about $109,000 a year. Financial professionals estimate that people facing an unplanned care event may spend their savings 2 to 3 times faster than planned. The fourth myth people say to themselves is, my family will be able to take care of me. Well, first off, you need to have that conversation with your family. Are they willing to sign up to provide your physical care? You might be surprised at their response. Most would say they would rather supervise your care than be the one to change your diaper. And you need to consider the physical aspect of asking someone to care for you, the physical demands on them. Would they be prepared to bathe you, for example? Can they lift you? Can they come and make sure that you're fed every day? And for those who say yes, absolutely, they would care for you, no question. What is truly the reality that they can carve the hours you may require for care out of their already busy lives? As far as being the one to provide care to a family member, the reality is that women who care for ill parents are twice as likely as non-caregivers to experience depression or anxiety. The physical and emotional toll is often underestimated, significantly underestimated. And the overall cost to a female caregiver is estimated at almost $325,000 because of lost wages and diminished working hours. So why is long-term care planning important for women, and why is it critical for women to start planning earlier for themselves and make sure that their partners and parents have a plan? The risks are greater for women than for men because women are challenged with these three issues. First, there are biological reasons why women are more likely than men to need long-term care. Secondly, women are up against gender-biased sociological expectations regarding the role of the caregiver. And the third item is that ultimately they may be confronted with the long-term financial risks of needing care or becoming a caregiver or both. By nature, women tend to outlive men. Once a woman reaches age 65, she can expect to live to age 88. Unfortunately, the longevity bonus women experience creates a greater risk for needing care. As CDC records show, more than 2/3 of the long-term care population in both nursing homes and residential communities are women. Compared to men, women need care for longer periods of time than men, typically 1.5 years longer. The cost for an extra 18 months of care could easily add up to 6 figures, which means that long-term care expenses for women may be considerably higher than expenses that men face. As the data shows, when it comes to various types of long-term care services, more women than men receive care. Just look at this chart. In every capacity or every type of service, if you will, or support, women have a higher statistic percentage-wise, and sometimes the gap is dramatic. Women are also more likely than men to develop Alzheimer's disease. Around 5.3 million in the U.S. age 65 or older have Alzheimer's, and 2/3 of Americans with Alzheimer's are women. New studies from the Alzheimer's Association suggest that these are some of the reasons why females are more vulnerable. Longevity is the greatest risk factor. Cardiovascular health in a woman's senior years is also a point. Since men have a higher incidence of death due to heart issues in middle age than women, men who survive beyond age 65 may have healthier cardiovascular systems and a reduced risk of Alzheimer's than women. And genetics play a role. Women may be more genetically predisposed to develop Alzheimer's disease. Scientists have identified the gene associated with the disease, and there's evidence that it may interact with the female hormone estrogen. So as that declines, there's a higher risk of Alzheimer's. When it comes to providing care, women are also more at risk than men, and it's difficult, if not impossible, to predict when somebody may need a long-term care support. Unfortunately, statistics show that the wives, daughters, sisters, and mothers in the family are most often the ones who carry the burden of caregiving. So the chart says 43.5 million Americans have provided unpaid care to an adult. That's a pretty significant statistic. Women tend to be the primary caregiver more often than men and dedicate as much as 50% more time providing care for men. On average, caregivers spend 24 hours a week caring for a loved one, and nearly 1 in 4 provide 41 or more hours of care per week. The sacrifice made by many of these caregivers goes beyond personal time and includes time lost from their career, parenting their own children, and leading a healthy lifestyle, family life, and more. Caregiving has been linked to depression and anxiety, placing women more at risk than men for these two conditions. Even more disconcerting is the fact that physical stress of providing care may contribute to the long-term care needs of the female caregiver. 1 in 4 develop health problems as a result of caregiving activities. Women who spend 9 hours or more caring for a spouse double their risk of coronary heart disease. and they're subject to other health issues such as hypertension, disorders of the immune system, and increased mortality risk. And this is important for women to keep in mind. Whether you provide care to a loved one or you need care for yourself, these risks come with some significant financial consequences. Regardless of where you live, the cost of long-term care can be staggering, and the costs continue to rise. More often, people prefer to receive in-home care. At today's prices, full-time in-home care provided by a registered nurse would amount to more than $152,000 a year. But can you imagine what the cost of long-term care may be 10, 15, or 20 years from now? This risk is compounded by the fact that for retirees, out-of-pocket medical costs are also rising. And for families who care for loved ones with Alzheimer's disease, expenses are skyrocketing. The average annual out-of-pocket costs are nearly 5 times the cost for people without those conditions. The financial consequences of becoming a caregiver can also be substantial. A woman may opt to take a leave of absence. Even though the Family Medical Leave Act may give her job protection, it doesn't guarantee paid time off. According to the U.S. Department of Labor, today only 13% of workers have access to paid family leave. Many women may sacrifice earning power with less hours on the job, and opportunities also for career advancement could be lost. As you can imagine, earning less could limit your ability to make contributions to your own company's retirement plan, and that could impact your employer's matching contribution. So ultimately, you may have to pay the price in retirement, having less savings and income from Social Security and pensions. In the early 1980s, the social worker Dorothy Miller noticed a new phenomenon happening in the family, which she referred to as the sandwich generation. This term refers to multi-generational caregiving in a household where adult children become sandwiched between the responsibilities of raising children and caring for aging parents. Many middle-aged Americans find themselves in this predicament because these same couples have delayed having children until their mid to late 30s, but now they're also sharing their parents' golden years while they're trying to do both ends of the spectrum. Those who find themselves caught in the sandwich generation bear the burden of financial challenges as well as stress and depression. The typical sandwich generation member is age 40 to 59. 1 in 7 middle-aged adults provides monetary support to an elderly parent and a child. The affluent are more vulnerable, and 43% of those with income of $100,000 or above are more likely to be sandwiched than those who earn less. Those are just some basic statistics. The cost to women caregivers can amount nearly to $325,000 in lost wages and Social Security benefits, but you can avoid this by taking action now to protect yourself from this risk. Also, it's important that your spouse or partner, parents, and in-laws have a plan in place to avoid this potential financial loss. You can plan for a better future by starting the planning process. So here's a snapshot of the long-term care planning options. And we're going to go over some of the highlights of each solution. This chart summarizes the solutions available and the relative strengths of each option using 4 key benefits: legacy protection, flexibility, leverage, and long-term care expense coverage. We'll start with self-funding. Some individuals want to maintain asset control by paying for expenses out of pocket, or they just don't believe in insurance. Yet most people are not financially or emotionally prepared to manage a long-term care event and the high costs that accompany it. The nature of long-term care is that it's unpredictable. We don't know how long it will be for. We don't know how intense the care needs will be. So it's often hard enough to put money away for retirement, let alone a separate bucket for long-term care needs. Consider carefully whether you can actually make the commitment and stick to it to put enough in savings for this solution. Remember, we're talking about needing to have around $100,000 for each year of care. If you have a 4-year need for support, that's $400,000, and it needs to come from somewhere. If you don't save the full funding amount separate from your retirement savings, then you're going to need to drain your retirement savings. If you're building a retirement plan together with a spouse, how much will be left for that spouse in the end if you tap into the shared pool of retirement money? What happens then if you get back on your feet, but your retirement savings now is depleted? Not all long-term care events are permanently debilitating or end in death, and I think that that's important for people to know. You can go on claim and you can come off claim at different times of your life. The next option is lifetime annuity with long-term care related rider. This is an option to consider if your primary goal is securing retirement income and you want protection from long-term care expenses. As a long-term care investment vehicle designed for retirement purposes, an annuity provides a stream of income for as long as you live. The long-term care rider provides additional income should you need care, but the long-term care benefit may be restricted to just nursing home care and provide nothing for a situation where in-home care or assisted living facilities are needed. It's important to understand under what conditions you can obtain additional income from this type of solution, so there are no surprises when you actually need money for care. Life insurance with an accelerated benefit rider is the third option. If your primary goal is legacy protection, in other words, you want to leave money to your family or your spouse or your kids, and you want added chronic illness protection, life insurance with an accelerated benefits rider may be an option. It combines death benefit protection with a living benefit. So if you were to develop a permanent chronic or terminal illness, the death benefit is accelerated so that you receive tax-free income funds to pay for expenses or to use for whatever purpose you want. Again, you need to make sure you understand how and when this solution pays in a long-term care situation. The fourth option is life insurance. It's a kind of a hybrid, life insurance long-term care combination. Those products are designed to offer more than long-term care protection. For example, a hybrid life long-term care solution may offer a choice of a death benefit or a cash value growth or a return of premium or a combination of those benefits. These benefits can be appealing to individuals who see traditional long-term care policies as a use it or lose it proposition. If you never need the long-term care benefit, this type of policy may provide a death benefit or the financial flexibility of return of premium options. Even though these hybrids may cost more than traditional long-term care insurance, they feature flexible premium designs that enable you to pay a single premium or spread your premium payments over a number of years, which could make paying for the protection more affordable. The fifth option is traditional long-term care insurance. If you just want a policy that covers long-term care expenses, this may be an option. Premiums are paid on a continual basis and are generally less cash flow intensive versus newer hybrid life products. Traditional long-term care insurance helps cover out-of-pocket expenses for a variety of services such as nursing home care, in-home care, assisted living, and adult daycare. If, however, you never need the care, you won't receive any benefits or return for your premium. Now, let's review how you can take charge of your future. So here are 3 simple things that you can do. Number 1, put yourself first. Think about your life and how the possibility that someone you love might need care in the future. If you have a spouse or a partner, do you think you could physically provide that care? If you have parents or in-laws, do you think you could physically provide their care or help pay for their care if they need it? If you're an only child or an only sister or a sibling residing near your parents, what is the plan if mom or dad needs care? Think about the potential also of needing care for yourself someday. Would you want to stay at home and receive care there, or would you rather receive care in a facility? If maintaining friendships and continuity in your life are important to you, consider how a sudden health-related issue requiring long-term care might disrupt your lifestyle if no one knows your wishes because you haven't planned. Number 2, plan for long-term care as a family. Talk with your spouse, your siblings, your parents, your in-laws. Have an open discussion about expectations and the importance of establishing a long-term care plan. You may find that it's not uncommon for relatives and even spouses not to be on the same page. Encourage your loved ones to join you in a family long-term care discussion with a financial professional who can provide an unbiased perspective and planning options. And the third point is to talk with your financial professional, just in general. Voice your concerns about the issues and ask your financial professional what you could do now to help protect yourself and your loved ones. If you're married or have a partner who does not see eye to eye with you, consider having a one-on-one with your professional because it's helpful for both you and your mate to communicate with an experienced person who will listen and give you an impartial point of view. You may have some preconceived notions about planning, so let's look at some considerations. If you're retired, you may be thinking that it's too late to begin planning, but you have options to help protect your future. If you're an only child, or the spouse of an only child, or the one sibling in the family who lives closest to your parents, you may be thinking, if your parents or in-laws need care, the burden's going to fall on you. Well, that's why you should discuss how you could plan to prevent this with your financial professional. If you think you're too young to begin planning, that may not actually be the case. Talk with a financial professional because being young and healthy is actually an advantage. You could potentially get more value for the dollars that you might pay for a long-term care solution when you plan early in life. If you're in a health-related field, you're probably more aware of the risks and recognize the importance of seeking professional help with planning in case you need care for yourself. You likely already understand the potential demands that you could be facing if you have to be a caregiver, and you can actually help your family understand the issues to encourage them to plan also. If you're married to a spouse or have a partner without coverage, especially if there's a significant age difference, you may think, well, what if they need care? How would you manage? Would it affect your career? Many times spouses don't see eye to eye with important issues. That's normal. So consider having a one-on-one discussion with a professional. What if you're single or divorced? Who exactly will care for you? Do you have your person identified, and are they informed about your wishes for your care? Whether you have someone designated to oversee your care or you have no one, it's really critical to explore your options with your financial professional. If you should have an event, don't make people scramble to figure out how to help. And what if you or your spouse or partner have coverage through an employer? Well, that's a great benefit, but are you sure it's sufficient? Is it portable? Because oftentimes when you leave an employer, that insurance does not come with you. Ask your financial professional to review the policy so that you know what it will give you benefit-wise when you absolutely need it at some point in the future. So let's review some key takeaways. Our gender makes us more vulnerable to both needing care and also having to provide care for others. The reality is that women tend to take care of everyone else first before themselves. Having a plan allows us to take care of ourselves first. If we can head issues off at the pass, we'll likely be less strained and stressed when an issue comes up for ourselves or a family member. Your age and current health can make a difference in what your options are. Let's face it, as we age, the body develops issues. If you are looking at insurance as an option, this is an important consideration. It's important to develop a plan, and a professional can help sift through your options and design a plan that fits for you. Take charge of your future. So I want to take a moment to share some personal experience with the hope that it will resonate with you and encourage you to be very thoughtful about your financial plan. This is my mom. She's 94. Her name is Rita. For most of her life, she's been healthy, but in the last 2.5 years, she's had 5 major health episodes that have knocked her out for about 3 months each. And during each episode, she needs full-time attention. Unfortunately, by the time I learned about long-term care insurance years ago, it was cost prohibitive to purchase it for her. She was in her mid-70s. And while I thought I would have family close by to help with her care, it turned out that the family pretty much abandoned us during our time of need. There was a lot going on career-wise for me at the time, so when Mom started having issues, it put a significant strain on my business. She had an episode of some sort about every 3 to 4 months, and we barely got her back on her feet from one, and she was having another. The stress I found myself having to deal with took its toll. I was exhausted all the time, and I found myself really struggling to juggle work, home responsibilities, her needs, and try to have some semblance of a social life. It was truly enough to make one feel like just collapsing into a fetal position and give up. I tell you this because life happens and we have no way to predict what tomorrow will bring. I've seen long-term care events in my clients' lives just devastate their retirement portfolios and create incredible strain on the whole family system. Now, having lived it myself, I truly have passion for helping women prepare for the unexpected. So before I close, I want to address the concept of a financial professional in more detail. You may or may not have a financial advisor who helps you manage your retirement investments. Some advisors do full-blown financial planning, and some just handle the investments. Some offer insurance, and some don't. In my practice, I offer financial planning services, but I currently don't offer investment advice beyond having an understanding of what rate of return you need in your portfolio to achieve your financial goals. If you're interested in having a full financial review with a discussion about your long-term care preparedness, of course, I'm happy to provide you that service. My regular fee is $300. But because you joined me for this presentation, and if you schedule through the link provided in the next few slides, then I'm going to reduce that fee to $150. And if you opt to move forward with a long-term care solution in the form of insurance, I'll waive that fee entirely. I suggest we get together for what I call a meet and greet, which you can schedule through my online scheduler at the URL provided. It's a 30-minute complimentary session during which we can determine if partnering for a financial review is of interest. Folks, I don't believe in pressure sales tactics. My job, I feel, is to educate. Yours is to decide. My passion is to make sure women understand their options because too many of us are unprepared for the future. My hope for this seminar and for any future meetings we have is that you'll feel more informed than when we started and empowered to establish a plan within your family system that protects you from the downside of a long-term care event. I'd like to thank you for attending my seminar. If nothing else, I hope I've encouraged you to take planning for a long-term care event seriously. I look forward to assisting you as you plan for your future. Please don't hesitate to get in touch.